Hey, it's been a rough couple months in the general markets and in particular for the precious metal mining stocks. You made it to the right place. Welcome to Ron's Basement. If you are looking for an update on the general markets, a focus in on gold, silver, and precious metal mining stocks, and I have some insights for you into recent developments that will affect the price of the precious metals as we head into the next 6 to 18 months. Let's get started right now. There's only one way to describe the general markets this week: bloodbath. Heck, it's felt like a bloodbath for the last, couple months? The S&P 500, the NASDAQ, and the small cap stocks all down more than 5% this week. It has gotten very, very ugly on Wall Street. Now, the price of gold did okay. It was down about 1.5% for the week, closed the week right around $1,842. And our friend silver, same thing, down about 1.5%. Closing out the week around a little over $21.50 per ounce. Now, I found something very interesting. I went back 3 years, and from what I was able to dig up, the price of gold 3 years ago was about $1,400 per ounce. So now that we're sitting at $1,800 and it feels like we're getting pounded and obliterated, which we have, right? I mean, gold's gone up to about 2,000 and been beaten down several times. But we need to remember that when we look back just 3 years ago, gold has appreciated significantly in value from $1,400 to $1,800. And what's even more interesting is the fact that the gold mining stocks, the GDX is in the GDXJ, are roughly at the same exact price today that they were 3 years ago, with a gold price that's $400 less. Hey, it's been a rough couple months in the general markets and in particular for the precious metal mining stocks. So I appreciate you guys hanging with me here in Ron's Basement. If you like my video, please give it a thumbs up. You can consider subscribing. Hit the little bell icon, turn on notifications. That way you'll be alerted every time I put out a new video. Thanks again. Let's get back to the video. Let's shift our attention back to the major markets. I want to point out to you that the NASDAQ is down over 30% from its recent all-time highs. The S&P 500 down 25% from its recent all-time highs. And I don't know how you sense this, but I don't feel like people are really freaking out. I heard somebody say that the other day. It's like, why aren't people freaking out about this? Why aren't we seeing any furor or headlines about how bad the stock markets are? I think in early July, when people open their second quarter 401k statements, they're going to be really upset. And I think they might be even more upset if the economy keeps going crappy and they lose their jobs and or their house values start to collapse, which is looking like an increasingly more likely possibility. Now let's talk about the world. Did you know that Germany and Japan are the third and fourth largest economies in the world? And I'm going to tell you something right now. They're both in major, major trouble. There were some headlines this week regarding Germany that they're predicting major economic slowdown, shortages of gas, all kinds of issues. Their PPI numbers are up like 20, 30%. Germany is in bad, bad shape, and it is one of the world's major economies. Now, who's even worse is Japan. Japan is the poster child for financial mismanagement. The yen is collapsing. They're doing yield curve control, and they're also printing money at a pace that isn't matched by anyone. If either one or both of those economies collapse or run into major, major issues, that's going to spell big trouble for the world economy, and that'll be a point where a lot of the world central banks need to pivot to more easy money policy to deal with the latest catastrophe, and that could be really great for our friends silver and gold. Oil fell precipitously on Friday in particular, and that's a signal that people are starting to think that the world economy is slowing. As the world economy goes into recession, less oil will be demanded and consumed, and that will be a downward pressure on the price of oil. If indeed we are moving into a worldwide recession, which I don't know how you feel about it, but I sure as heck believe that we are. And if you ask the world's CEOs, they'll tell you we're heading toward a recession as well. There was a report this week that 60% of the world's CEOs of the largest companies predicted that we'll be in a recession by 2023. 60%. Now remember, those guys are paid to be optimists. So if you read between the lines, to me, that points toward the fact that the world economy is slowing very quickly. And one final point. I was thinking the other day, it feels like the world is becoming like monetarily very, very tight. Everybody's raising rates. Everybody's trying to slow their economies. The analogy I thought of was it feels like the world ran up all these debts on credit cards, and now they're to the point where there's no more credit cards left to borrow more money, and things are slowing very quickly. Just like you as a household, if you did the same thing, if you didn't have a job and had 4 credit cards, and over the course of a year and a half, you racked up $15,000 debt on each credit card, you'd get to a point where you had a ton of debt, $60,000, and no job and no real way to get any more new debt. And it feels like that's where the world is right now. We'll see how they deal with it. As you know, the central banks are a little different. The United States Federal Reserve can essentially get unlimited credit cards, but we're going to see how this plays out. My gut tells me it's still going to be good for our friends, silver and gold, and the precious metal mining stocks. Thanks for watching. Thanks for being here in Ron's Basement. You're always welcome. And until next time, you be well.